regular Insight viewers recognize her right away as a valuable resource in planning and sustaining our retirement. She's Heather Foster, investment advisor and fiduciary. Today we want to talk about politics. We don't want to talk about who you're voting for or who you want to vote for. Frankly, I just don't want to hear any more about any of it.
I stay away from those conversations generally.
But it can make a difference.
It can.
In our money.
Markets, yeah. So I'm actually going to say something I probably shouldn't say on this show since we're a media-driven station. But you know, when you're thinking about money, you shouldn't be listening to the media. Sorry, but you shouldn't be. You should be listening to the numbers, the chief economists that are out there looking at what are the fundamental analysis, technical analysis going on in the marketplaces. Because no matter what happens, and the big conversation right now, obviously, I've gotten a couple clients asking me, hey, we've heard that other people's, advisors are saying get out of the market if impeachment happens, the markets are going to crash, fear-based. I consider that fear-based investing, and I talked even last week about fear-based investing. Usually never works out well for people. Fear-based investing means someone's trying to sell you a product. So stop before you do that. First of all, I've said it over and over again, plan first, invest second. You should have a plan laid out ahead of time. You should only have in the stock market things that are long-term in nature. Yes, if we can catch the market falls ahead of time, and if everyone had a crystal ball on exactly what was going to happen, we'd all make a lot of money and everyone would be really, really happy. But that is not the way it works. So, number one, stay calm.
Take a deep breath.
Take a deep breath. Number two, make sure you have that plan in place, because again, if your advisor knows your long-term strategy, which is, hey, we need at least 3 to 5 years worth of any income needs that you might have, probably in something more conservative in nature, the rest of the money may be longer term. Advisors that are strategic in nature, which I consider, an investment advisor representative, which we're actively managing our clients' stuff, are actually getting in there and saying, hey, it doesn't necessarily mean that we need to get out of the markets. Maybe it's that we're heading towards different sectors within the markets. Maybe we're adding commodities back in, or value stocks, things like that, or high dividend paying companies that tend to weather the storms very, very well. Again, take it back from the media and say, hey, it's not about what the media says may or may not happen, because you're going to get a lot of different opinions. Go back to the numbers. Where are corporate rates looking like? How are our profits on our companies? Are the Feds going to lower rates again? These are the things that are going to really affect our markets. How's the economy doing? How's unemployment doing? These are the areas that you want to focus on. Then you tend to have short-term fluctuations. Short-term fluctuations are going to be the people that aren't looking at a long-term plan. Instead, they're actually looking at the media and saying, panic, fear, get out
right now.
Let me get out, let me get back in, right? They're going to drive the market somewhat, and you're going to see these wishy-washy days of 3 and 4% declines. But again, you should have that long-term plan in play. So if you don't have a long-term plan, if you're not already invested for a long-term strategy, meaning you've got 3 to 5 years of your income needs set aside in something more conservative, the rest has purpose behind it, then you need to talk to somebody that can help you lay that plan of action out. The mistake that people make is they break the rule of investing, which is buy low and sell high. So if you are someone that I guess is a little bit afraid, if you don't already have that plan in place, we are at market highs again. Markets have rebounded from that quarter that we had last year. We are kind of back to normalized rates in the market. So if you are looking at adding conservative investments in, I would say it's not a bad time to do it, but you should have that plan in place first. Don't just cash your money out, throw it into something safe out of fear-based investing. That never works.
Do it because you want to put that in your plan, not because you think you need to right away. I think I've told you before, when we went through the whole 2008 recession, we probably went a good year and a half. I would not let Joe open up the quarterly statements because he just had a cow about it. And so, take a deep breath and relax. If you would like Heather to help you develop that plan, give her a call today, 234-2200, or check them out online, fosterfinancial.net. We'll be right back.